Welcome to another weekly market update. The date is February the 26th, 2017, the Sunday after the market closed on Friday the 24th. As always, we're looking here at the big picture view. What's the overall market doing? To try and keep an eye on the long-term picture and the short-term picture, because these things affect our individual trades, if not our overall investments. And as we watch the stock market affects everything from your pension to the confidence on the streets. Here's the S&P 500 since the bull market began late 2009, and it just has an interruption here and interruption there, and as of late just keeps on going. It's been an extremely long bull market, but you hear a lot of people saying it can't go much longer, and that is a factor. But the bull market ends when the bull market's ready to end. It looked like it was going to end last year, but it turned around, and it just keeps on chugging higher. I've been saying now for a few weeks, the higher it goes, gets above its 40-week line there, the blue line, the more it's at least due for some kind of healthy correction, because that's just not normal behavior. But we're not going to get in the way of a speeding train. Let's look at the 3-year chart here. As we get it's the week-by-week view, and we see the 40-week is the blue line, and the red line is the 70-week. The prices of the market is comfortably above all the major averages, and just going completely nuts, really. It's really pushing into the clouds now. It's got a head of steam on it. And here's the daily chart. As I look at the daily chart, we can see here the RSI it's got SV60. If anyone follows that system, it's behaving like a high-flying individual stock, not a stock market. I can question why, and it's tempting to do that, but you really just got to look at the market and listen to what the market is saying. Evidently, it sees a lot of optimism ahead in Trump's new policies. There's no clues yet that this market's going to turn around either, and even have a healthy correction. I don't see any heavy volume selling going on down here, which is one of the giveaways. Market just keeps on pushing high. Another thing I look at is this chart. It's the percentage of stocks over their 50-day moving average, and I keep an eye on it. Kind of when it gets too stretched, like here, at least it's going to be a correction or something soon. But we're not even. It's high up and around at the sort of 70-80% mark, but it's not exactly as high as it has been. So there's still further room to run. So. As I said last week, the view is still the same. The short-term picture is up, the long-term picture is up. But stay vigilant. Don't lose any profits on trades you've got open. But at the same time, you've got to let those winners ride. So it's a balancing act right now. So keep a close eye on things. Lock in some gains if things start to drop back. And most of all, the overall market, we'll keep a close eye on that. And I'll speak to you next week.